Hello everyone, my name is Pawan Kumar Kavli from SAS Institute of Management Studies. Today I am here to present you on a topic mutual fund from security analysis and portfolio management. What are mutual funds? Mutual funds are a pool of money collected from many investors for the purpose of investing in stocks, bonds, or other securities. Mutual funds are owned by a group of investors and managed by professionals. In other words, a mutual fund is a collection of securities owned by a group of investors and managed by a fund manager. Primary structures of mutual funds are open-ended, close-ended, unit investment trust. Open-ended are purchased from or sold to issuer at the net asset value of each share as of the close of trading day in which order was placed. As long as the order was placed within a specified period before the closing of trading, they can be traded directly with the issuer or via an electronic trading platform or a stockbroker. A closed-end fund is a type of mutual fund that issues a fixed number of shares to a single initial public offering to raise capital for its initial investment. Its shares can then be bought and sold on stock exchange, but no new shares will be created and no new money will be flow into the fund. Below is a diagram of how mutual funds work. Fund manager pool money from investors, choose security to invest in, and generate returns and give shares to the investors. There are six common types of mutual funds. First is money market funds. Second is fixed income funds. Next is equity funds. Fourth is balance funds. Fifth, index funds. Sixth, specialty funds. Money market funds. Money market funds invest in short-term fixed income securities. Example of short-term fixed income securities would be government bonds, treasury bills, commercial paper, and certificate of deposits. These types of funds are generally a safer investment, but with a lower potential return than other mutual funds. Fixed income funds. It buys investments that pay a fixed rate of return. This type of mutual fund focuses on getting returns coming into the fund primarily through interest. Equity funds. It invests in stocks. Furthermore, there are different types of equity funds, such as that specialize in growth stocks, value stocks, large cap stocks, mid cap stocks, small cap stocks, or a combination of these. Fourth is balance funds. It invests in a mix of equities and fixed income securities, typically in a 40% equity and 60% fixed income ratio. The aim of these funds is to generate higher returns, but also mitigate risk through fixed income securities. Next is index funds. It aims to track the performance of a specific index. For example, the S&P or TSX index funds allow the index and go up, and index goes up and goes down, and the index goes down. Index funds are popular as they typically require a lower management fee compared to other funds. Specialty funds. It focuses on a very small part of market such as energy, telecommunication, healthcare, industrial, etc. Benefits of investing in mutual fund. First is professional management. Mutual funds are actively managed by professionals who constantly monitor the fund's portfolio. In addition, the manager can devote more time selecting investment than a retail investor would. Investment diversifications. It allows for investment diversification. A mutual fund invests in several assets classes and not just a single stock or bond. Liquidity. Mutual funds possesses high liquidity. In general, you are able to sell your mutual fund within a short period of time if needed. Disadvantages of mutual fund. Management fees and operating expenses. Mutual funds typically charge a higher management fee and operating expenses. This would lower the overall return. For example, if mutual fund posted 1 year return of 10%, the MER would lower this return. Loss of control. Since mutual funds are managed by a manager, there is loss of control when investing in a mutual fund. Remember that you are giving someone else your money to manage to when investing in a mutual fund. Poor performance. Mutual fund returns are not guaranteed. In fact, according to research, a large majority of mutual funds fail to beat major market indexes like S&P 500. In addition, mutual funds are not insured against losses. Best large cap mutual funds to invest in 2022 in India are Axis Blue Chip Fund, Canara Robeco Blue Chip Equity Fund, Mirae Asset Large Cap Fund, BNP Paribas Large Cap Fund, Edelweiss Large Cap Fund. Thank you.